51 trading strategies. 34 of them are dead. This is the file. Every one of these was a rule somebody swore was the edge. A reel, a video, a thread, a script somebody published. And a few of them were mine. They all got the same test, and the test killed 34 of them. I am going to show you how they died, because the way they die is more useful than the one that lived. Before the bodies, the method, because without it this is just another opinion video. Every strategy gets the same treatment. I split the data in two. The first half is where I am allowed to tune. Pick the average length, the stop distance, the session window, whatever the original post said mattered. The second half I only ever touch once. If a setup only works after I have seen the second half, it does not work. I have just memorized the answers. Second, costs. Every trade pays 1.6 points, round trip. That is the spread plus commission on a micro NASDAQ contract, and it is the single most lethal filter in the whole process. Most social media strategies are profitable right up until you make them pay to trade. Third, when a bar could have hit my stop and my target, I assume it hit the stop first. I cannot know from bar data which came first, so I take the pessimistic side every time. None of that is clever. It is just refusing to lie to yourself. The most popular one. When the 20 crosses the 50, wait for 2 touches, then enter. Here is what a moving average actually is. The average of the last 20 closes, plotted after those bars already happened. It is a line that follows price. It cannot lead it. I tested it on gold and on NASDAQ. 48 variations. The win rate landed between 7 and 46% depending on which variation you pick, and that spread is the tell. When a result swings that far on small parameter changes, you have not found an edge. You have found noise that occasionally lines up. After costs, it lost money on both markets. Here is the entry in the file. The reason is boring. Nobody's real orders are resting at a moving average. Liquidity sits at round numbers, at yesterday's high, at the overnight low. Places, not calculations. This one I wanted to work, because I am awake at those hours anyway. Trade the overnight session, the story goes, because it is quieter and the moves are cleaner. I tested every scheme I could build on it. One of them was this. If the 11 o'clock hour goes one way, does the midnight hour go the other? 490 nights of data. 50.6%. That is a coin flip with a story attached, and after costs the coin flip loses 3.79 points a night. Thin tape moves a long way on very little and reverses just as easily. The useful part is what it changed. The toolkit's main job became telling you when not to trade. Most of the hours in a day are that. Everyone points at the volume spike at the open as proof that buyers are arriving. Look at it across every day in the file. It is in the same place every single time. Volume restarts when the session restarts. The spike is the clock, not the crowd. And once you know that, every volume filter you have stacked on top of it gets watered down in exactly the window you most wanted it to work. That is the kind of thing you only find by testing something you were already sure of. Before I show you the one that lived, call it. Do you think it wins more than half its trades? Here is why that is the wrong question, and why win rate is the most misleading number in trading. If your average win is 1.5 times your average loss, a 50% win rate makes money. Break even is around 40% once costs are in. Now take the 90% win rate from the advert. To get there you usually risk 10 to make 1. 9 wins puts you up 9. 1 loss puts you down 10. You were right 90% of the time and you are behind. A win rate with no risk and reward attached is not a statistic. It is a decoration. One rule survived the out-of-sample test. I am not going to read you the rule. That is the part people pay for, and if I say it out loud there is nothing left to sell. So here is the entry, with the mechanism blacked out, and then everything a rule like that actually did. Roughly 1 setup a day. Most days it does not appear, and the discipline is not taking something else instead. 30 trades on Real Micro NASDAQ prices, May 15th to July 10th. 14 won, 16 lost. It is wrong more often than it is right. 2 contracts a trade. The average winner made $816. The average loser cost $478. Over the 30 trades, that is $3,781 on a strategy that lost more often than it won. And the half of it you would have hated. The first 17 trades lost money. All of the gain came after. 30 trades is a small number, and I am not going to pretend otherwise. I am not going to tell you it prints money. It survived a test that killed 34 others, which is a different and much smaller claim. 16 more are still on the shelf, unproven, waiting for data that does not exist yet. 34 dead, 16 unproven, 1 alive. That ratio is the actual lesson. Not that trading does not work. That almost everything you are shown has never been tested by the person showing it to you. The test protocol is in the description. Run it on your own setup before you trust it. That is worth more to you than anything I could sell you. One last thing, and it is not a sales pitch. I am giving 30 people free access for a month. I want it broken before anyone pays for it. Send me your TradingView username in a direct message. All I want back is honest feedback, including this is useless if that is the answer. No payment, no card, nothing to cancel. If it does not survive 30 people trying to break it, it does not deserve to be sold.